There you are.
Hey, good afternoon and welcome to Freight Forecasting. I'm Michael Vincent, and joining me today, Zach, the Sultan of Sonar Strickland.
You can see my hand. There I am.
There he is. He's right there. And Anthony, the economist.
Yes.
Smith are joining me. And so the theme of the show, what we want to do here is talk about freight forecasting, the importance of it, all of the data sets that you need, the different disparate data sets that you need, and different tools that you have. So we're going to look at outbound tender volumes or the load volumes throughout the United States. And we're going to talk with Zach about what he kind of looks at, and I'm going to be building charts while we do that. And we have Anthony Smith here with us, who's going to be talking with us. We'll be discussing what does it look like moving forward. Will this spike continue? What will it look like? Will it level out? And what kind of recovery do we see after this pandemic? Hopefully we hit the backside of it soon.
Definitely.
So welcome to the show, guys.
Hey, thanks for having us.
Awesome. So we're seeing these outbound tender volumes start to spike. Now, when did we start seeing these things spike? And first, what's an outbound tender volume?
So outbound tender volumes, basically it's an index created measuring the amount of electronic tenders that shippers send to their carriers, requesting them to pick up and service their freight.
Right.
So we've created an index, and it's a base level of 10,000 with a base date of March 1st, 2018. And so if it were to go up to, 11,000, that means that there is a 10% increase in load volumes for that day.
Doesn't mean there's 1,000 more loads.
No.
It means there's a 10%
Correct.
increase.
It's just like the Dow
Gotcha.
Jones index or any of those indexes. We have a base value, and the purpose there is to figure out how much is the percentage change over periods of time.
Gotcha. So market growing or
Exactly.
shrinking relative to a set date as...
Yeah, most people are looking at things in terms of percentage swings.
Right.
So not absolute values, because absolute values can be very deceiving, depending on the sample size, et cetera. But it's you want to be able to figure out, and it's easier to ascertain and apply percentage changes in numbers versus absolute values.
Gotcha. And so then the other portion, there's two other indices that we're going to be looking at, or data sets that we're going to be looking at and comparing. And the other one is OTRIs, or Outbound Tender Rejection Index.
Correct.
And so is that also a index based on a specific date?
So we call it an index, but it's actually a rate. So this is actually what it's a tender rejection rate. So when they send over these electronic tenders, the carriers have an option whether or not to accept or decline the tenders. So the more that they reject these electronic tenders, that is an indication that there is either better options out there for the carrier to take in terms of like higher rates or better opportunities or a higher priority shipment somewhere, or the capacity itself is just not available.
Right, gotcha. Mm-hmm. So they have other options.
Other options, and or they just don't have the availability.
So if you said it's a percent, it's the number of loads being rejected expressed as a percent of the total loads being offered. Would that be fairly accurate?
That is 100% accurate.
Right, gotcha. Cool. Then I've been correct all these years.
Yeah.
And the other one is tender lead time, or TLT.
Yes.
Which is it is the time from tender to a carrier to the actual pickup date.
Yes, to requested pickup date.
So if I say Zach or Anthony Smith Trucking, I'm going to give you this load, pick it up. What's today? Thursday. Pick it up Tuesday. What is that? Is that a 3-day lead time? Do they count weekends or not?
No, they do not count weekends.
Okay.
Yeah.
So it's like LTL service.
Yeah.
That's a 3-day lead time.
3-day lead time.
Right. And so why is that important to look at that?
So the longer lead time that you have, that's an indication that shippers are trying to get they're trying to secure capacity, but it also could mean that they are, especially in times where they're trying to surge, like they put out a bunch of loads all at once. They don't want to give next day because they know that that's going to compress the window for the carriers to have availability.
Right.
So they're essentially just giving the carrier enough heads up to where they want to make sure they give them enough time. And of course you can give too much time
right
in between there, but typically it's right around 2 to 3 days lead time in the dry van market.
Gotcha. So if tender lead time if we're measuring tender lead time in a market and say normalized market is 2.5 days, right?
Mm-hmm.
If it's dropping towards 2.25, 2, 1.25, 1.5 days, or whatever it is, what is that an indication of?
So it could mean two things, but the most
Right.
prominent thing is the way that it's probably unexpected on the shipper's end. They're basically saying, okay, we're getting all these orders, coming out rapidly.
Right.
We just don't have the time to to give you enough lead time to get off the dock.
So that's one.
That's one. And the other reason that this could be happening is simply due to the fact that they don't care. The capacity has gotten so loose that they can basically wait till the last minute to fulfill their order, to send over their load request, because they're getting so much capacity all the time.
Right. So one is this indicator that they could be falling out of their routing guide, right?
Correct.
And the others, they just don't care.
Right. No, they're getting so much.
They feel so comfortable.
Yeah, exactly.
Whatever it be.
Now the first use case, of course, is you're going to be able to see that in terms of reflected volumes.
Right.
You're going to see the volumes with that, and so you're going to see the surging
if you
volume.
see volumes dropping or just flatline and TLT dropping, that's not necessarily a case of them running out of or falling out of their routing guide.
No, this is a case of like we've got a lot of shipments.
In conjunction with rejections going up,
right.
TLT dropping or tender lead time dropping is just a second indicator.
Correct.
As Anthony so graciously with us today.
Hello.
Looking svelte, by the way.
Why, thank you, Vincent.
I didn't get that kind of love.
You need to. You need more than one data point to look at what's going on.
You definitely do. One data point can be telling, but you need two, hopefully to kind of confirm a certain trend, three to really kind of solidify things.
Yeah, and so why the sudden uptick in outbound tender volumes?
Well, there's been a lot of consumer activity.
A lot of we've been talking about it constantly, right?
Right.
And so it really started jumping when, like last week?
No, actually March 2nd.
March 2nd.
March 2nd.
Wow, it's the 19th already. Unbelievable.
And it was like a faucet being turned on.
It really was.
And it hasn't really, it slowed down intermittently, but it has not really slowed with any consistency.
Right. And so when we've been talking about this, it seems ad nauseum on air about the volumes going up and the rejections and what's going on in the economy and how this is going. I'm going to build a chart while we kind of talk about this.
Okay,
and show everybody how we build this and kind of what you're looking at, and Anthony, what you're looking at.
Sure.
And so we'll start basic, and we'll build a market watch table as we go.
For sure.
Right.
Mm-hmm.
And pull in the indices that you would normally look at.
Yeah.
Right.
Let's do it.
Let's do that. So the first thing that I need to do, are we going to pull this up on screen so they can see this? Thank you. So what you do is you come into this add pages. Uh-oh. What's that? There we go. Add pages. And I want to put in an output FFing as I always do and save it. I think our...
Click save.
There we are.
It didn't take.
All right, and what that does is bring up a blank dashboard, and we can see that I've got the name right here, and I can change that later, but I bring that up, and so what I want to do is come over to this menu over here on the right-hand side, the plus, and come down and pick a market table, right? And so we're going to look at the outbound tender volume, so I'll just put OTVI in there. And so I come down here to manage symbols, and where can they find this at, Zach?
So the managed symbols?
Well, no, the managed symbols I'm in, but where are they going to find the volumes that we're looking at? So OTVI is going to be
in the most popular trucking indices.
Right, gotcha.
Yeah, because we have 5 most popular indices that we use: OTVI, OTRI, TLT, Head Haul Index, etc. are all in that.
Right. And so outbound tender volume index is right here. And so when I hit this plus, I can look at these different areas, right? So I can look at X market, state, national, regional. I can even look at lanes, right? We even have Canada in there as well. So we're going to look at the X markets. And so I can hit this plus symbol, and I can pick out the specific markets that I want to look at.
Right. And the X market is probably one of the more useful because it's one of the smaller geographic regions. It's also highly representative of capacity in an area.
Right, so explain an X market.
Yeah, an X market is essentially a grouping of 3-digit zips in an area, It's divided up across the 135 markets across the country. These are overlaid with DAT's zones for ease of translation. So a lot of people are accustomed to those zones. They're developed, as a way to help divvy up the freight market. Having a good representation of a general area as well as dividing up, specific regions more effectively, so you don't get so much in one market.
Right.
Yeah.
Beautiful. And so while he was talking, what I did there is I added those symbols by clicking the add selected markets, hit done, and brought this brings these symbols in, and then when I come to the bottom and hit save, it's going to produce my market table for me. And here we have it.
There it is.
So we've got all the markets in the United States and the outbound tender volumes, and I can hover over these and it can tell me exactly what we're looking at. So Allentown, Pennsylvania has been one of the ones that has been growing and then kind of normalizing the last day, right?
Actually,
kind of
over the last,
stumbling a little bit.
Yeah. So Allentown, Pennsylvania, and you should show them how to sort.
I will. Yeah. So it's not that. You can then click on this arrow right here and sort by the name of the market, the value of the index that you're looking at, right? The percent change or the market share. And so, which one do you normally go towards?
You can, in this one, you can use the value, but you can use market share as well.
Well, if we're looking at the largest markets that are out there, if that's what you're looking at market share, right?
Yeah.
Otherwise, you're looking at the one with the what is the value? It's
exactly
its largest value of
the index that
of
you
the
have.
index. So
Yes.
would that be the largest outbound markets?
Yep.
So market share would almost be the same thing,
It's the same
right?
thing in this situation.
Right. So we'll use market share, and what that has changed it to is, here you go, Atlanta, and then we go to Harrisburg, Ontario, or the Inland Empire, right? Dallas, and then we have Allentown here, Joliet, and then Houston coming down here. So from top to bottom, we're looking at those, right?
Yeah, and these are the most relevant markets in the country. Again, you see the biggest market on there has just over 4% of the total, volume in the United States. That seems like a small number, but
right.
And it is relatively small, but
Sure.
It is the biggest freight market in the United States. Atlanta is. And the reason this is important is because every single day that I go in to look at, the market itself, you want to go from a top down. I look at OTVI USA.
Right.
And get my big picture movement. What's the overall market doing? Well, that tells me good general direction, general information about what the direction of the market volumes are.
So do you pull that up on a chart?
Yeah, I'll pull that up on a chart.
Well, let me do that right now. So charting is very simple as well. If you hit the same over here, this menu, the plus sign brings down the menu. Chart, just click on chart, and it then brings me up a chart widget. Enter symbol here, and so for the USA,
OTVI USA. OTVI.USA.
OTVI.USA. So OTVI, outbound tender volume index .USA, and we select that, and there it is.
Yeah, so you can see that the market volumes are on a meteoric rise.
Yeah. And I can stretch this over here so it'll fill more of the screen so people can see this a little bit better, but there you go.
There it is. And so I want to know what that consists of, because it may not be rising evenly throughout the United States.
Right.
You can have these little small isolated pockets, and especially in some of these bigger markets, they can drive overall volumes higher.
Sure.
And this is important. It doesn't matter if you have operation in Atlanta or not. If you're a carrier, you need to understand how all of this is interacting, because all the trucks in the United States operate within the same geographic realm.
Yeah, they absolutely do.
What I mean by that is that you're going to have trucks moving in Atlanta covering freight. Maybe you operate in California, but there's a lot of trucks that'll operate in Atlanta and California going over the road. So if something's going on in Atlanta that is, surging, it's going to reduce the capacity in the California market. So that's what this is good for, is it'll tell you where are the volumes surging.
So you can plan where you're going to send assets.
Yep.
Or if you're a shipper, where you're going to experience, if you have multiple ship from locations, where you could be experiencing capacity crunches.
Yeah, these are going to be, anytime volume increases, that's a signal that you are potentially at risk for reduced capacity.
Gotcha. Or a broker, where to focus.
Exactly.
Right? I mean, if you're primarily from both aspects, right? So if you've got contracted business, where do you need to focus first to handle those contracted customers, right?
Exactly. And also of note is, if you are an asset-based carrier, you're contracted business in a specific market. Say you have a lot of exposure in the Atlanta market, and you see your volumes have gone down 5%. you get in here and you check out Atlanta and it's actually going up 5% week over week, that's a signal that you need to call your shipper.
Would that be benchmarking?
Yeah, I mean, essentially, it's
Gotcha.
There's several use cases for this, and of course,
absolutely there are.
Everybody
100%.
wants to. Yeah, most people want to go to the capacity. They all.
Yeah.
But the flaw that people really need to watch out for in this is you do not equivocate. I think I just made up a word. You don't.
Anthony does that all the time.
You don't equate.
Economist.
You don't equate increased demand with the same reduction in capacity. Surging demand does not always result in reduced capacity, especially if the market is oversupplied.
Oversupplied in capacity.
Correct.
Or I mean, we've spoken about this before when when Insightful Donnie.
Yes.
I think he was still Delightful Donnie at that time.
Oh, goodness.
But now he's Insightful Donnie.
As always.
When he was on the show, we were talking about some markets seem to be more insulated than others.
Yeah,
right.
They
and
are.
we were looking at reefer, by the way, refrigerated capacity is what we were talking about. And we were looking at Memphis and
a lot of reefer
Memphis,
activity.
Well, at that time the rejections were going through the roof. Is what we were looking at, but it had like a quarter of the volume that Atlanta did.
Yeah.
And Atlanta's outbound tender rejections on refrigerated was a quarter of what Memphis is. I mean, they were completely out of balance, right?
Two relatively different markets altogether.
Completely different markets.
Yeah.
Memphis is surrounded by other markets that were at the time hot for
Reefer.
refrigerated capacity,
Yep.
right? So you've got to be looking at that.
And then, the carriers will be accustomed to operating in these markets.
Right.
So they're going to be consistently figuring out ways to get into these regions because they have a lot of contracted accounts designed to get them where they need to be.
Right. Gotcha. Perfect. So we're looking at this outbound tender volume index that is here, right? And so one of the things that we can do is, and you've been hearing us talk about, is how high it is. And this is 12,000. When you look at this, you're just looking at this, you got to put a point to it, right? You have to put some type of baseline to this to figure out, is that something significant other than this incredible steep rise that you're seeing here? But I mean, if you can track this, you see other places where there were steep
looking at that
rises,
chart,
right? So
yeah, looking at that near-time chart, just where you had it. I mean, that's a pretty significant signal. I mean, anybody that's looked at any chart,
right?
You see that it's stable as it can be for a month. We did not see hardly any change up or down for about a month, and then all of a sudden it just takes off.
And then suddenly you see it there. So one of the things that you can do inside here as well is you can bring this in and see what does this mean compared to year over year. Right? And if we take, I believe if we go down just 2 years, really we're going to see this versus 2019 and 2018 as to exactly what's going on here.
And it's crushing it.
And it's crushing it. 18 was huge, if you don't recall.
Yeah, it was big.
And we are way above that.
Well beyond it. Now,
the big thing is like it kept pace with the similar trajectory and seasonality before March. So it was like, okay, par for course, typical seasonality up until a couple weeks ago.
Yeah, and this is what technical analysis people would call a breakout.
Yeah.
The volatility signal is so large here, though, that this is what we're seeing in the stock market right now. The reason they are shutting down the financial markets, when they have these drops, is because a lot of people are trading on these algorithms, and the volatility is so high, the algorithms cannot keep up with it. Yeah. So they have no idea. So it keeps the market from collapsing. So what we're seeing right here is something, I mean, I think everybody would agree the coronavirus is an anomaly itself.
Yeah, absolutely.
But this is the type of model-breaking stuff that there's nothing that we can do to train a model here. It is such a unique event in time that you literally have to just recalculate things every single day.
You do. And so what do you do, Mr. Economist?
Well, as an economist, as you mentioned earlier, I like to look at multiple data points. And so looking at one input isn't enough. Looking at, see if you can have that story replicated on another input altogether. So when I'm looking at this, I'm looking at different industries, I'm looking at different segments, I'm looking at different verticals. I'm looking all around just to see if I can confirm that story. And first and foremost, I'm looking to see what the data tells me. And I'm not looking to really kind of prove my my point. I'm trying to find the point. And so I'm looking at, for example, volumes. I might start looking at, as Zach mentioned, different markets. What markets are really kind of experiencing this volume increase? Is it across the board throughout the country? And if I'm looking at economic impact, I'm starting to look at different segments that might be experiencing growth, that might have similar historical trends to the historical movements within the trucking industry. And so a lot of it has to kind of come together.
So one of those might be length of haul, right?
Correct.
Yes.
Is that something you look at on a daily basis?
Yes, I do.
What is that? What do you glean from that?
So length of haul, and you have to have some kind of understanding of trucking in general. So the shorter length of hauls are, the way that the market works are generally these DC to retail type movements. So they're going to be the longer haul freight is going to come from areas of like Los Angeles and go to, it's going to be distributed from the ports or some other, import site where they're going to have giant warehouse presence, and it's going to be distributed across the country. If you look at the biggest shippers in the United States, like Target, Walmart, Costco, et cetera, they have these hub warehouses, and then they have these spoke distribution centers. And there's a limited amount of these throughout the United States. So the longer haul freight goes from the hubs to the spoke distribution centers. And so the shorter the length of haul is, that means that a lot of the freight is going from the DCs into these metro areas with the retail stores and the storefronts.
And so that's a great point. So what does that mean to you? Is that showing us warehousing, changes in warehousing? Or
changing in warehousing, also the types of freight that's being moved. So we were just chatting about anecdotal evidence of when we're going to the stores and we're just seeing all these panic runs. A lot of that's going to be, I think, shorter haul movements when we're looking at, as Zach said, some of that stuff being moved from warehouses.
Right. So seeing large spikes in volumes in the shorter hauls. So, like the city, the local, the short, and the medium.
Yep.
And that's when you're talking about these hubs, that's like medium, which is what distance is that?
So hubs are generally positioned they want to be within 250 miles of their final destination in general. And they're trying to get it under 100, ideally, but the real estate costs don't allow them to do that, especially in markets like Harrisburg, the megalopolis up there.
Yeah.
We've gone through this before, trying to evaluate whether or not to open a facility, as close to New York as possible, but far enough out to where we're not paying a premium for that warehouse. It's
difficult.
Very difficult.
Very difficult.
If you pull up oaloha.usa, you're going to see something that I find quite fascinating. And, I was talking about it on FreightWaves Now the other day.
oaloha.usa?
oaloha.usa. What is this? Average length of haul for all of this freight volume that you're looking at right now.
Whoa.
It is going the opposite direction. Now, if you pull back out even further, you're going to see that this is actually not a normal move.
So what I'm
going
to do here is I'm going to go down to the bottom. You want me to take 6 months? Across the bottom here, you can change the timeline that you're looking at here. So you want me to go back out 6 months here?
Go 6 months at first.
So there's 6 months.
So you can see that we have some intermittent disruption in the length of haul, and it coincides with holidays, but also different times of year where freight movements, you see Thanksgiving and Christmas, where's all this freight going? To the stores. That's right before those big retail pushes. And you see that we have blown right through that. Pull all the way out a year.
Yeah, full year, okay.
Just to see what we're talking about. We have blown through that tremendously. So this right here is telling you we've got a lot of retail storefront activity, a lot of short haul freight that's moving this number more significantly than it has in the past.
That's amazing.
Yeah.
Wow. That's something else. Let's look at this once real quick, the OTVI.USA. And so I wasn't dooner. I have to say that every time I break mic etiquette. So if we're looking at this, the OTVI, right? And we're looking at, we'll show the 1 month or whatever. But we were talking about length of haul, and so that is actually in here, right?
Yep.
And so those are what are they? TVI?
Yeah. So you got, if you want to type it out, and I'll tell them.
Yeah. All right. Cool.
COTVI. This is going to be your local length of haul, which is going to be anything that moves from 0 to 100 miles. Then you have your short haul freight, which is SOTVI.USA. That's going to be anything that moves from about 100 miles to 250 miles. So all that store freight that I'm talking about is moving in those two circles, if you will. And then you have MOTVI, which is your mid-haul loads. That's anything that's moving 251 miles to 450 miles. That's your regional freight. Typically stuff that moves within like the Midwest or, Southeast, that type of freight is going to move in this mid-haul lane. And then you have things that are moving in your tweener haul. Now, this is the most difficult segment for a lot of carriers to manage because it's typically things that are over a day's length of haul, but less than 2 days. So it's not necessarily ideal to move in that segment. That's going to be the stuff that moves 451 miles to 800 miles. Then you have finally your long haul freight, which is 800 miles plus. This is your 2 day plus movements. A lot of team freight in this.
Right, and then so you noticed as I was building that, and thank you for that, Zach, because it's really hard to talk and do this at the exact same time.
I have the exact same problem.
Trouble chewing gum and walking at the same time, but I'm learning. I'm taking lessons from Anthony, or yo-yoing and riding a longboard at the same time, right?
It's an art, or holding an umbrella at the same time.
It is. But you noticed that when I was building this, all those were flatlined, right? Because we were using one axis. So what I did was I hit the display here and changed it to dual, which gives me dual y-axis, and then now you can really see what is going on here. And so when we're looking at this top line, or this, I guess it's fuchsia, is that right? Is that right?
Sure.
Why not? I mean, all right. Where's my wife when I need her?
Yeah.
That is the long haul. So it's been pretty flat. It is going up. There's definitely going up, but it's been pretty flat. But you can definitely see down here in these others. And let me hit this display here. Maybe this will help. Are they showing this on screen?
Not yet.
Doesn't sound like it, or doesn't look like it.
But if you see it on the screen, what we're looking at here is effectively showing you that long haul freight. There it is. There it is. So long haul freight, it's still
the long haul right there.
A lot of freight in the United States, but it's not growing as fast as your Blue Mountain freight down there is.
Yeah, your Blue Mountain is the aggregate.
Oh, I'm sorry.
Right?
I'm sorry. I couldn't see that you had the aggregate, but SOTVI and COTVI. What colors are those?
COTVI is right here in the purple. SOTVI is the green.
There you go.
And you can see that these are definitely growing
They're growing faster.
And I'm not sure, Vincent, if the camera caught it in time, but the thing that you just did while you were pulling up the screen was that large fonts, right?
Oh, yeah. Sorry. Yeah. So where we were at was and let me do this, is we had this look on it, and it's very difficult to see. So what you can do is come down here under display and take your large font, and that will just enlarge everything so you can see it a lot better.
Perfect.
Right? Thank you. So that was awesome.
Yeah.
That was awesome. We didn't get to the O-tries yet.
But I think we covered the OTVIs pretty strongly.
We did, and we only have a few minutes left, or a couple minutes left, so I want to thank you guys, and well, I guess we'll be on air quite a bit, but...
Definitely.
Yeah.
We're the chosen few.
We're the chosen few. The Skeleton Crew still here bringing you as much information as we possibly can. And we'll do freight forecasting again next Thursday at 4 o'clock live. But plenty of other shows going on. Tomorrow, What the Truck. What do you have going on tomorrow?
FreightWaves Now every day. Me and Anthony, of course.
Right.
Anthony's going to be talking that economic stuff, which is becoming, of course, increasingly... more and more relevant as this progresses. I mean, I think even Anthony will admit that this is, you're having to go into uncharted territory as much as anybody.
Yeah, it's definitely a lot of uncharted territories. It's a lot of assumptions being made now at this point because it's such an unprecedented area. And I think typically you have a forecast, but now you're going to need to make at least 3 different forecasts for different scenarios that might play out. So it's definitely interesting time.
Yeah, we're into that scenario building model type search thing where we're trying to find something. If you watch the Weather Channel and you look at the cone of uncertainty,
right? It's quite wide right now.
It is insanely wide.
Yeah.
There's a best case scenario. We pull out of this thing real fast. The coronavirus dies off as the weather.
I'll take that
heats
option.
Up. Yeah. Worst case scenario is that the economy collapses and we're all in a Mad Max Beyond the Thunderdome reality. So
I'll take
that is a wide range.
I'll take A.
Yeah. It's a wide range. Chances are we'll be somewhere in the middle.
Yeah, right. So lots of stuff coming at you, lots of information we're trying to put out to you. As we said, we're the Skeleton Crew, the essentials here at FreightWaves headquarters in Chattanooga, and bringing you as much information as we possibly can. So FreightWaves or Freight Forecasting live Thursdays at 4, and Quick Casting is coming out soon. There'll be quick 2 to 5 minute videos that'll dig into freight forecasting, specifically looking at the different data sets and the different tools that you have within Sonar to utilize those. So hit us all up. Are you on social media there?
I'm on all the social medias. asmith@freightwaves.com, of course, is my email. And a good way to search for me, because there are quite a few Anthony Smiths out there.
One or two.
Yeah, one or two.
I was shocked at how many Michael Vincents there are out there, actually.
There's more than one?
There's a ton of them out there. Right. Yeah, in fact, there's a lot of Michael W. Vincents out there as well. Okay. So there's a ton. So on Tweeterizer, I am Vincent the Dude. But I'm also on LinkedIn as well. So
yeah, I'm mainly on LinkedIn. You can hit me there. I mean, I check the Twitter, but I don't tweeter a lot.
I don't tweeterize a lot either, but I check it quite a bit. So, yeah, reach out to us. Let us help you out. Let us give you as much information as we possibly can. Thank you for watching. We'll see you next week. Stay safe. Peace and love.